Hey everybody, good morning. Welcome to the Option Pit Stock Market and Volatility Report. It is I, Andrew Giovanazzi, Chief Operating Officer and Director of Education for OptionPit.com. Hello. So to some of you, I think I'm going to be on the West Coast in May, the week after Mother's Day. Blogs. We're doing our blogs. We're starting to blog 2-3 times a week. So far, blogs are pretty good. This one's about GE. More important, earn continuing education credit with our portfolio management masterclass. Learn how to use options for long-term trading. If you don't have the ability to, use options like daily, the whole point of this class is learn how to use options on like the 3, 6, 9-month time frames, putting trades on and letting time work it out. All right. So if you want to sign up, go to our class and you sign up. All righty. Next, what's going on? Well, I'm going to tell you this. So I sometimes I do the Option Radio Network show, the Options Insider Radio Network, and we laugh and we say, the reason for the volatility has not revealed itself. So your VIX has been going up all week, and now you actually have the cash going up. Do you notice how the curve is staying in this contango? So basically, whatever is going on, we don't have an end to the vol regime, meaning we've got the market still hasn't, let's say, called the top in VIX. That's what this looks like. So to me, I just expect VIX going higher until we get some sort of future curve. Although, so we're starting to get a little flattening here, but it's going to happen relatively soon. So this is slightly delayed. If we look at some of our real-time data here, I'm looking at, I don't want to look at SPX, look at VIX. Okay. I'm seeing March ordinary 1725, the April is 1722. It's now about flattish. We're flat all the way across the curve. Okay, we're flat all the way across. All righty. There we go. So one of our vol newsletter trades, some people are starting to get filled and starting to sell out some of their calls as things start to rip a little bit. So you have a flat curve. Now that the curve is flat, I would say it's 1769. I don't know why vol is going up, but it is. So what we'll do is, in the short term, it's probably going to go up. And the easiest thing to do when vol is going up is use short-term long options in VIX or VXXB. One thing I will say, though, is we have a pretty substantial move, in VIX, and we're getting what I would say is a muted move in VXXB. It's moving slightly less on a percentage basis than it should, but not too bad. So again, waiting. Bonds are starting now to rip as well. This is something we looked at from a vol point of view even yesterday. TLT volatility, it was relatively inexpensive. The vol is coming in. I still think this vol is undervalued. Right? All of a sudden, if the Europeans are going to start doing their weird thing with interest rates, TLT volatility is undervalued. All right? So I don't expect this regime to stop until we get the curve to start making a little more sense of, right? Because now it's kind of in flux, so vol's just going to keep going up. All right, that's what we got. Don't know why it's happening. Like the Sith Lord, like when is the Sith going to reveal themselves? It's the same thing. Don't know why the burst of vol started. I think part of it is there's no trade deal yet. The Chinese, the Huawei, that big telecom company, that hasn't really resolved, and I think the market is still thinking this isn't going to happen. All righty. So with that, That's what we got. All right, everybody, you have a good day. We'll have our gold lab today at 3:30, and I will talk to you all later.